Well, we're a little deeper into our trading session here, and we're going to see how things are doing with a little expert commentary from Chris Swift of Swift Trading Incorporated, based in Nashville. He joins us right now. Good morning, Chris. How are you?
I'm doing great. Marlin, how are you this morning?
So far, so good. Let's take a look at these active markets here. I want to take a look first at that corn market with our quotes provided by Bar Chart. And right now on the corn, things have really stabilized and gone absolutely flat. Unchanged on December now at 406 3/4. If you recall, when we opened up this morning, the December corn was down about 1 3/4, but now it has come back to level off ahead of the report tomorrow. We have the WASDE report coming out tomorrow. March corn now just a tick higher at 414. We've been higher and we've been lower several times here over the past 12 hours or so. Let's take a look at the January soybeans. We did have export sales this morning, about 123,000 tons to unknown destinations. January soybeans are at 1109.5 right now. That's up 8 cents from our close on Friday, but it's off of its overnight high still by roughly about 9 cents or so. And let's take a look at March. It's now 8 3/4 higher at 1108. So we've actually kind of been sagging a little bit after the open and now kind of stabilizing. On the wheat market in Chicago, December 3.5 cents lower at 598.5, so it's under that $6 benchmark. In Kansas City, December is 1 3/4 lower. We're now at 553.5, and that is 7 cents off our overnight high. Meanwhile, in the spring wheat market, December is down 2.5 cents at 554 3/4. Overnight, we had big gains in the cotton market, and we're hanging on to most of them. December cotton up 112 points right now at 69.74 cents per pound. So, Chris, what do you think of the open so far here on the grains? Do they tell you anything?
Not really, Marlin. I've looked at it a couple of different times, and of course, with the corn and the bean market already having all of the harvest done on it yet, I look for nothing but demand to be a real big driver in that market. And as we saw last week, the resumption of the downtrend in the U.S. dollar boosted some of the grain prices, and I think that's kind of the trend in the dollar is lower. So I look for grain prices to still kind of be firm.
When you look at the soybeans, and they had some just outstanding gains for a while overnight, but they've really come off of those now. But how much upside potential do you really see there? And can they really run away from the corn?
Well, it's probably not run away from it too awful much, but I know China's demand is increasing with their hog production. As they continue to produce more and more hogs under a controlled environment, they have to have a cleaner feed source, and I think that's where the corn and the beans are benefiting the most, is a greater need for that cleaner feed source for Chinese hog production.
And, of course, we've been keeping close tabs on what the Dow is doing here this morning, and currently on the Dow futures, December is now 1,200 points higher. 1,222 points to be exact at 29,426. So we're already about 400 points off our earlier high from this morning. So keep an eye on that. Sharply higher, but really coming off its highs. We'll come back and take a look at our livestock trade with Chris Swift in just a moment. Don't go anywhere. We'll be right back. We are talking with Chris Swift of Swift Trading right now, and let's go to the livestock trade and begin with our live cattle market. This is really something to behold today. We wondered if we would open higher or lower today. Well, not much doubt about it now, Chris. We have December live cattle. Look at that, 212 higher at 110.80, make it 215 higher now, and it's being outdone by the February. It's up 2 1/4. $2.25 at 114.40. Wow. On the feeder cattle market, so far today, we have the January contract gaining $3.70 at 139.62. All the months beyond November are over $3 higher. Just amazing gains here in the cattle complex today. Lean hog trade, well, December is up 85 cents at 65.75 in February, now up 90 cents now at 67.92. That would be off of our earlier high this morning by about 60 cents or so. But look at them run, Chris. The livestock trade, one of the hottest markets so far this morning outside the Dow.
It surely has been, and I can only assume that vaccine information that we got this morning is a big benefit to it. Anything to help the hospitality and restaurant industries get back on their feet again is going to be a huge benefit to the beef market and to the pork market as well. So I think that's what you're getting now. All we got to do is let the time go by that it'll take 6 to 12 months to get the vaccine to see if it works or not, to get everybody back acclimated again. But clearly this is a first shot up and probably is due to that vaccine having been noted as being good.
So technically, where does that put us now? If you look at, well, let's say the cattle chart here, for example, what kind of footing are we on with this kind of a move today?
Pretty good. We've been up almost 12 days in a row off of those lows. And then for the fat cattle contract, a lot of them have taken out the August and September highs now. So that makes them look very good and kind of on a different pathway than what we had thought before the elections. And now that we kind of see with the vaccine, again, having been found to have some great benefits to it, it's still going to take some time. And maybe what we end up doing is trading in a sideways range for maybe 2 or 3 more weeks until we actually get closer to the Biden being put into office there, and we see how well this vaccine really is being able to given out to the public.
So with moves like this in the futures, do you see a big jump in the cash cattle market this week?
It will definitely probably get a firm undertone underneath it because of it.
So what about this feeder cattle trade? They have really been gaining more than the live cattle ever since we had that bearish cattle on feed report. Can they keep it up?
Well, and probably so. What we've noticed now is that the receipts, after we saw that on feed report, the receipts for stockers and feeder cattle have been going down tremendously. So I think that October could actually end up to be maybe only 100% placement, maybe 1% or 2 over or under, but nothing like what we have seen in the months past. And then starting off in October, some very low numbers coming in here. So maybe we've already moved a tremendous amount of cattle due to that drought and not going to be burdened with heavy placements going forward.
Thanks a bunch for the info this morning. Chris Swift of Swift Trading. Janet, back to you.
All right. Thank you, John.